Hi everyone, I am Avadhoot.
This is second part of the final account of partnership firm. If you are directly watching this part, then I recommend please watch the first part of this video.
Now, while given in the problem, they have given you different adjustments too. Means in the examination or in the book also you can see that there is trial balance is given and later on 6 to 7 adjustments are there. Depends whatever is there. While considering the problem after preparing the your pro forma, then see the trial balance. First read the adjustments and mark to the left hand side of the trial balance of that item which are having adjustments. That item to be kept to the inner column and other items to be taken to the outer column except purchases, sales, bad debts, then your capital figures, both the partners, that will have to keep it where inner column. Return inward and return outward. These figures to be kept 101% to the inner column. And then wherever you are making the star mark, that figures to be taken to the inner and other items directly write to the outer column. Prepare the pro forma, then go to the trial balance, read the adjustment, have the marking and start the problem. When you start the trial balance debit side first item, keep in mind the items which are lying in the trial balance to be posted only once. I repeating, only posted only once, either to trading account, either to the profit and loss account, or either to the balance sheet. Keep in mind, debit item to be posted to the debit side, credit item to be posted to the credit side. I repeat, debit item only once to be returned to the debit side, credit item only once to be returned to the credit side. But 2, 3 items are there that you are going to either reduce from having the credit balance, you are reducing from the debit, or debit balance reducing from the credit. For example, return outward. Return outward is always having credit balance, but we were deducting from the purchases trading account debit side less return outward. Similarly, sales always having credit balance, we are writing to trading account credit side, but the return inward is always having debit balance. That is to reduce from the credit side, that is from the sales. Drawings, capital is always having credit balance, drawings is always having debit balance, but we were deducting from the capital. Less drawings, we are not writing to the debit side. We were deducting from the credit. Not actually credit, but from the liability. Are you with me? By this way, you have to know what are the adjustments are there. I am going to give you 15-20 adjustments here. Generally, these adjustments are asked in the examination. Go thoroughly. Closing stock. Closing stock means at the end of the year, what is the stock? Whatever the stock remains in the company, in the organization, that stock is called as a closing stock and it is your asset, that is current asset. That current asset obviously goes to the balance sheet asset side. Balance sheet asset side, whereas it is a trading account credit side in the pro forma. We have already seen it. The most important thing here, the closing stock is having two values. One, market price, market value, and another it is called book value or at a cost price. The question immediately arises whether we should take the market price or we should take the book value. The answer is very simple. The value whichever is less, that to be taken. Either it may be a market value or it may be a book value. What to be taken? The figure whichever is less, that is to be taken into account. That is called as what? Closing stock. Now, every adjustment should have two effects because last year we have seen every debit must have corresponding credit. Here we are having two, that is one debit, one credit, that we have to keep in mind. Then only your problem will be tallied. Otherwise, it will not be tallied. Sometimes there may be two debit, one credit, two credit, one debit, two debit, two credit may be there. As per the adjustment that we have to do it, but it should be every debit must have corresponding credit. Next is our depreciation. Now, what do you mean by depreciation? Depreciation is nothing but the reduction in the value of the assets due to its tear and wear. Last year there was a big topic of the depreciation. In the 11th standard, there are different methods of depreciation are there. What adjustment we are going to do it? It is a reduction in the value of the asset. It means it is charge on the fixed asset. And fixed assets we were writing to the way balance sheet asset side. Therefore, less from balance sheet asset side, less from particular asset, and it is a non-cash loss. Therefore, that goes to the losses, goes to the profit and loss account debit side. There are three adjustments, three depreciations are there on the asset. Then you have to write to the profit and loss account two depreciation and write one plant and machinery, land and building, furniture, inner column figure and take only one figure to the outer column. That is also method of writing the depreciation to the profit and loss account. I think so you are getting. Next one is outstanding expenses. Outstanding. What is the meaning of outstanding? Which is not paid. It is payable. Obviously, the word payable comes, that goes to the balance sheet liabilities side. Therefore, one entry is to the balance sheet liability side. Whenever we are going to see the balance sheet liability side is a payable, it increases. It is not paid, it is payable. It increases your that particular expenditure. And that's why expenditure we are writing for trading or P&L account. Hence, it is given that trading account or profit and loss account debit side add in a particular expenses. Now, for example, wages, outstanding wages is given. Then we are going to add to where trading account debit side, add outstanding in the wages. If suppose salary is given, then we are writing salary to where P&L account. Therefore, profit and loss account debit side, there is a to salary, add outstanding, right, add, take the figure outer column, and second effect is to be given to the balance sheet liability side because it is payable. Next one is prepaid. Prepaid means pre means in advance, which is paid in advance, which is opposite to the what outstanding, isn't it? Outstanding we were adding in a particular expenditure, here prepaid we are deducting from a particular expenditure. Insurance. If suppose the insurance premium is paid up to the June and we were preparing for the March, it means that April, May, June, 3 months advance you have made a payment. That is called as what? Prepaid. You are preparing for March 22, 2022, and you are paid the insurance premium up to the June 2022. It means that 3 months, April, May, June 22, you are paid in advance. That's why it is deducted from the insurance. Insurance we were writing to the profit and loss account debit side, less prepaid the amount, you have to calculate, and then it's to be written to the outer column. And secondly, that is to be receivable balance sheet asset side. If suppose in the exam it is given in the trial balance, insurance into bracket 12 months and paid up to what? June 2022, and we were preparing for March 2022 and amount is 12,000. It means for every month it is 1,000, means your prepaid amount comes 3,000. Then you have to keep in the mind that profit and loss account debit side to insurance in the column 12,000 less prepaid 3,000, outer column 9,000, and that 3,000 goes to the balance sheet asset side as a prepaid insurance 3,000. Isn't it? This is a very simple example for the prepaid expenses, that is trading account or profit and loss account debit side less from particular expenses and balance sheet, that is asset side. Next, fifth one is that we are going to consider bad debts or RDD. Now here bad debts or RDD means what? That is, effect is the same. What do you mean by effect is the same? Bad debts, irrecoverable loss. We are not going to receive any amount from that particular person. Whereas RDD, it may receive, it may not receive. but the entries for the same will be the as it is. Same entries are there to be done. That's why it is shown under the 1 bad debts oblique RDD, RBDD. Balance sheet asset side we were writing to the where less from debtors. Sundry debtors most important. From that we are going to reduce it. From that where we are going to reduce it. Debtors means somebody owes to us. We have sold on the credit and we want to receive the amount, and due to some whatever may be the reason, it is not receivable, means our debtors are going to be reduced. That comes under bad debts. Similarly, RDD means this it may receive, it may not receive, complications are there. That also comes under the, therefore debtors are going to be reduced. Hence, it is to be deducted from the balance sheet asset side, less from debtors. Secondly, it goes to the profit and loss account, debit side, in your pro forma that we have written there. If you can see the pro forma, to bad debts in trial balance, add bad debts in ADJ, these bad debts in ADJ, add RDD in ADJ, this RDD in ADJ. You'll have to put in a column, then total less RDD in trial balance, and then figure take to the outer column. Bad debts RDD is to be deducted from the debtors. But prior to that, if suppose that will adjustment comes later, but prior to that, if suppose unrecorded sales are there, that adjustment will have to do it. Or dishonored bill receivable is there, that adjustment will have to do first. Then we'll have to deduct the bad debts from the debtors, all these to be added to the debtors, then bad debts to be deducted, then you have to calculate RDD, and then you have to calculate discount on debtors. Means discount on debtors to be calculated at the last. See, I will give the again, that is balance sheet asset side sundry debtors. The other adjustments, whatever is there, that is unrecorded sales, that we have to record means I have to add in debtors, or suppose bill receivable dishonored, then our debtors are again going to be increased, then it is to be added in the debtors. Any other adjustment is there that to be done first. Then whatever the figure comes, on that we have to deduct bad debts, and then after deducting the bad debts, the figure arrived, on that we have to calculate the reserve for doubtful debts, RDD by percentage, and then whatever the figure arrived, that is your real debtors are there, on that calculate discount on debtors. This is to be always kept in mind. Sometimes in the examination, it will be given above first bad debts, and then it is given unrecorded sales. You'll have to make an adjustment first. You have to make the unrecorded sales first and then go for the bad debts. You should be very careful while considering such type of the problem. Then next one is discount on debtors. Just I have explained, less from debtors and profit and loss account debit side. Discount means we allowed to the debtors, that is you may pay the less amount to us. Am I right? And that's why our customers are going to make the less amount, which is our loss, that is to be taken to the profit and loss account, where debit side. Then discount on creditors, opposite to discount on debtors. That is, whenever creditors means we owe to somebody else, we are not paid fully, we are paying less amount. Am I right? As our creditors are allowing us what discount means balance sheet liability side less from creditors. Our creditors are going to be reduced, and whenever we are paying less to somebody else, it is our profit, and that's why it goes to the profit and loss account credit side, isn't it? Next, that is the adjustment number 8, that is your interest on capital. Now, what do you mean by interest on capital? Why it is to be calculated? Interest on capital. Capital is a liability because capital is a liability for the business, whereas it is asset for the businessman, owner, here in this partner. Whenever we are going to calculate, they are investing their amount. If the partners were invest the same capital in some financial institution as a deposit, they will going to receive the interest. Obviously, their interest is to receive the interest on their investment. The question arises in your mind, they will get in the profit. But suppose the profit is not there, then what to be done? And therefore, to the some extent, they will be given the interest, and we were paying, our business is paying that interest. It is called our expenditure, and that goes to the profit and loss account debit side, isn't it? It is your expenditure. Keep in mind, we are writing the books of business of a partnership firm and not anybody individual partners house in final account we are preparing. We're preparing for partnership from business only. And therefore, for the business, capital is liability, and that interest we are paying, it is our, what we can say, expenditure that goes to the profit and loss account debit side, whereas it is the balance sheet liability side where we are having the pro forma capital of so and so, add interest on capital there to be added in that particular capital. Next, interest on drawings, which is opposite to interest on capital. Because whenever the drawings is there, it is taken over any cash or goods, asset, whatever is there, that is taken over by the partner, owner for his own, that is household purpose, for his own purpose or for the family members, whatever may be the case. Whenever it is done, means is withdrawing from the business, therefore it is to be added is the original drawings. Where we are writing the drawings? We were writing the drawings, balance sheet, liability side, less drawings. I have shown you. It is to be added in the drawings. In that case, you have to write a drawing figure pre-inner column, do this adjustment in the pre-inner column, add it, and then take it to the inner column, and total capital less these drawings after adding, and then take the figure to the outer column. Similarly, it whenever we are charging something on this drawing, it is our income, and therefore it goes to the profit and loss account credit side. Is it there? Profit and loss account credit side. Next, unrecorded sales. What do you mean by unrecorded sales? We have made a sale, but by one or another reason, it is not recorded in the books of accounts. Therefore, you are increasing the sales. Therefore, it goes to trading account. Credit side, you have to add in the sales. That is unrecorded sales. Obviously, these are the credit sales are there. These credit sales is to be means what amount is receivable. Credit sales means what happened? Your amount is receivable. And therefore, whenever we want to receive the amount, it is to be what? Debtors. And balance sheet asset side, we have to add in debtors first before making the adjustment of bad debts RDD discount. Okay. Next, unrecorded purchases. We have made in purchases, but it is not recorded. Means purchases where we are writing, we were writing purchases to trading account, debit side. After deducting, you may add, there is no problem. Trading account, debit side, add in purchases. And when we are making the purchases, we owe to somebody else. Means our creditors are going to be increased. Therefore, balance sheet asset side, we were writing in the creditors. Therefore, add in sundry creditors. Means trading account debit side, add in purchases, and second, balance sheet liability side, add in sundry creditors. Now, the 12th, our next adjustment is bill receivable dishonored. Now, whenever the receivable word is there, it means we are writing bill receivable to the balance sheet asset side. And whenever it is dishonored, means our bill receivable is going to be reduced, and that's why it is to be deducted from the balance sheet asset side, less from bill receivable. Whereas the same adjustment is there to the balance sheet asset side. Whenever the receivable is reduced, your debtors are going to be increased. Therefore, we'll have to add in the sundry debtors prior to bad debts and RDD is to be deducted from debtors. Means bills receivable dishonored is having two effects. That is both effects to the balance sheet asset side, that is less from bill receivable, and add in sundry debtors. Our next one is bills payable dishonored. Payable goes to the balance sheet liability side. Obviously, the adjustment also goes to the balance sheet liability side only, that is less from bills payable. And whenever the payable is to be deducted, not only bills payable is deducted, not availability of funds, but there are so many reasons for that it is dishonored, then it is to be added in the sundry creditors. Creditors we are writing to the balance sheet liability side. Next, it is uninsured goods destroyed by fire. When your goods are insured, you are going to receive the amount from the insurance company. But here the goods are not insured and it is destroyed by fire, then first of all, you have to keep in mind that is whatever may be the reason, when the goods goes out, it is to be taken to the trading account, credit side, that is the right by goods destroyed by fire, full amount. Is it there? Next, it is you are not going to receive any claim from the insurance company because it is not insured one, and hence it is your total loss, and losses are to be debited to the profit and loss account, that is to be debited to the profit and loss account debit side. Next one is insured goods destroyed by fire. Just that is the insurance company admitted your claim. Suppose your goods are totally destroyed by fire is of rupees 10,000. Therefore, we'll have to write to the trading account credit side goods goes away at rupees how much? 10,000. Isn't it? Next, that is your full amount to be taken to there. Next one is suppose insurance company admitted a claim. It is not received, it is admitted. Admitted means we want to receive the money from the insurance company and the claim amount is suppose we can say 8,000. Therefore, it goes to the balance sheet asset side. It is receivable. That is the claim amount. It is what claim amount and you want to receive it. Therefore, it goes to the balance sheet asset side 8,000 and your loss is 2,000. That goes to the profit and loss account debit side. It is your loss and that is two debit, one credit. One credit is given 10,000 and you are giving two debits 2,000 and 8,000. That is profit and loss account debit side and balance sheet asset side. Another thing is next point is that we have to consider here, that is goods taken over by the partners for their personal use. Now the word personal use comes, it means that we are going to use that one for drawings. Personal use means what? Your drawings are there. Whenever drawings means balance sheet, liability side, add in the drawings. And the goods are going out from the business, whatever may be the case, goods goes out, trading account, credit side. Goods distributed as free sample. Company what does? To sell product, there another product will be given as a sample. Then in that case, you were distributed your goods for the main goods. It is called what? Advertisement. It is known as what? Advertisement. Advertisement goes to the profit and loss account debit side. Therefore, we will write to the profit and loss account debit side. And as we knows it very well, whatever may be the reason, when the goods goes out, trading account, credit side. Next, goods purchased but recorded as sales. These are the additional adjustments are there. It is very rarely asked. Trading account, goods we have purchased it, but what it is recorded as sales means we have considered as a sale, which is wrong. Therefore, first we will correct it from the wrong, that will be corrected and we will make the proper posting. Therefore, it to be trading, we were writing the sales to a trading account credit side. Therefore, it is wrongly added in the sales means we'll have to reduce from the sales. Hence, trading account credit side less from sales. Next, sales increases means your receivable increases, that is called as your sundry debtors. And therefore, your debtors are increased. Actually, it is not increased, but it is shown as increased. Therefore, we are going to less from the sundry debtors. Now, the whatever the wrong we have done, that we have made a correction. Now, we'll have to make the correct entry, that your goods purchased. And purchase means we'll have to add in the purchases trading account debit side, and second entry it increases your sundry creditors. Therefore, balance sheet liability side your payable increases, that goes to the sundry creditors that is to be added in the sundry creditors. Similarly, next we'll have to consider that is your goods we have sold, but it is recorded as purchased. Previous we have seen goods purchased but recorded as sales. Here goods sold but recorded as purchases. It means that again we'll have to wrong entries to be corrected first. Means trading account, first of all, we are going to debit. It is added in the purchases, that is to be deducted from purchases. Am I right? Therefore, trading account, debit side. Whereas the balance sheet liability side, we were added in the creditors, means we'll have to deduct from creditors, sundry creditors. Now, what is our correct entry? We'll have to add in sales. Trading account credit side, you'll have to add in sales and add in sundry debtors because your receivables were going to be increased. These two were wrong, that we'll have to correct it, and therefore first we have made a wrong to corrected and then we pass the correct entry. And last one is outstanding income. Income is not received, it is receivable. When the word receivable comes, it goes to your balance sheet asset side. That is most important. Balance sheet asset side. And income is there, that is to be taken to the profit and loss account credit side. Profit and loss account credit side. Such type of the adjustments are generally there in the examination, not 20 adjustments. Max to max, it is what 5 to 6 adjustments are there to this particular account. Now, here is to solve the problems of the your final account of partnership. This is the most common, generally asked, and you prepare it your final account very well and score out of marks. That is most important. Please like, share, and subscribe to my channel. Thanking you. All the best, everyone.